Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Aussie dollar, US dollar, FX futures for Tuesday, June the 14th, 2011. Well, a change of trend for today's trading, and we can see we have a candle that's made a higher high and a higher low. We're analysing the second last candle here on this chart. The last candle that we see is the candle that's currently trading, so that's just recently begun its 24-hour trading period, so we can't analyse that candle at the moment. So the candle that we're looking at is this highlighted one, the second last candle. Previously we had a tweezers bottom pattern, and that's basically where we have a prior downtrend. We have the two lows of adjacent candles in the same region, very close together, and that set the market up for a potential change of trend in the first time frame to the upside, and that change of trend was confirmed today. We had a candle that made a higher high and a higher low. This candle that's made a higher high and a higher low has a green body, so once again we have good follow through from the bulls for today's trading, and they've closed the market with control by closing up towards the high and shown good strong commitment to taking this market higher. They have, however, lost a little bit of commitment as they were testing up around the high of the red-bodied candle here around 105.85, and as the market tested the Tenkan-sen, the green line here, which represents the equilibrium in Ichimoku charts terms in the fast-term time frame. We can see the very small shadow on the top that represents downside price rejection, and it represents the buyers losing some commitment, but it's not too significant that they lost that amount of commitment. It is fairly significant, however, that the market did find resistance at the Tenkan-sen. Now, as we noted previously as well, the Kijun-sen had turned flat, and often when that turns flat, it tends to attract price action back towards there, and that's exactly what's happened here. So we have had that attraction back towards the region near the Kijun-sen and the Tenkan-sen. Now, the market is trading within the cloud, so we have an overall neutral bias in this market at the moment in big picture terms. The market is still trading down below the Kijun-sen and Tenkan-sen, so technically we have a market that's bearish in the medium-term and fast-term timeframes, but we're trading that close to both of these indicators, so that does represent a market that's fairly neutral in the medium-term and fast-term timeframe as well. Now, in terms of support and resistance, we do have a gap here that was opened previously that extends from roughly 106, extending up to about 106.80, and that could be significant for this market if it does attempt to trade higher. The window here in candlestick terms will offer very, very strong resistance to this market, as will both of the indicators, the Tenkan-sen and Kijun-sen, and the cloud extending through to the top of the cloud around 106.50, so very strong resistance overhead for this. Resistance extends up to these swing highs up around 107.70, and we can see that there was good downside price rejection as the market was trading up around that area, extending up to 108.43 roughly, where we had this previous swing high. Now, in terms of a higher time frame trend in terms of peaks and troughs, there is a possibility that this market could be set up for a change of trend to the downside. Previously, we have had a change of trend to the upside where we had a trough, a peak, a higher trough, and a higher peak as the market traded up above that peak around 107.40. And then the bears took over and closed the market down below the previous trough here. So if we do have a change of trend back down to the downside, that will set the market up with a lower trough. So we would have a peak, a trough, perhaps a lower peak, and then if the market takes out this trough, a lower trough, and that could set the market up for a test to lower levels down, certainly down to around the 103 level roughly. Now, the thing that could actually change the trend here, even though the short-term dynamics aren't favouring a change of trend, is this potential resistance offered around the Ichimoku indicators. So that is quite strong resistance around those levels. To the downside, we do need to watch the low of that current candle, which is at 104.39, and then certainly the support down around the 104 region. We highlighted that previously, that is very strong support, and we can see here that there was a lot of trading candles with long shadows on the bottom, as there was upside price rejection and quite strong upside price rejection from this level around 104. So if we do see 104 level tested and we have a bearish close down below there, we could see the market trading quite easily down below 103 and testing down to the bottom of the cloud. So for the next day's trading, certainly the area around the Tenkan-sen and Kijun-sen is important, around the top of the cloud, around 105, 66, 86, 105.80, extending up to around 106.50, and then certainly around the bottom of the candle around 104.40 for a potential test of 104.40.